Hi, welcome to another honeystocks.com weekend analysis, and this one is going to be going out on the 26th of September 2020. Now, before I get into the charts and switch over to my screen share, I just want to thank everybody for the nice comments and for the emails, etc., thanking me for the analysis that I've been providing over the last few weeks. Maybe you've just stumbled across my work for the first time, but over the last few weeks, I have been putting together a thesis regarding, why I feel like a certain defensive course of action is required in some of the leading areas of the market, such as technology, etc. That thesis seems to have been played out so far, so we'll see how things go. I'm going to just walk you through exactly what I'm seeing in the market and the sectors that I think could be a massive area of focus. I know after the analysis last week, where certainly there was a lot of bullish calls, and again there was a lot of profit on the back of the analysis from last week. Again, I just want to thank everybody that reached out, and obviously it does mean a lot to me. But I'm going to switch over to the screen share. But if you are a day trader, you can probably switch off now. My work is not geared towards day trading in any way, shape or form. The time horizon that my work is geared towards is weeks to months. We're primarily trend followers. We have elements of, more of a swing style, with certain charts, etc. But predominantly we're trend followers. We're looking to identify stocks and charts and strength in the market. We're not about buying weakness, and hopefully you'll understand by the end of this analysis what a professional analyst looks like versus those that claim to be professional analysts. And I'm talking about all the YouTube gurus that are out there. It's a very, very sore subject for me because, certainly there's a stigma attached with the analysis that's provided out there on social media, all the get rich quick schemes and all the rest of it, and it really, really bugs me. So hopefully that this work stands out amongst the sea of, I don't know what word I would like to use there, but I'll keep it to myself. But let's switch over to my screen share. Let's walk through some charts, and again, hopefully you get some insight from it and some actionable ideas based on technical logic. So let's dive into the charts. Before I get into the individual charts, please do pause the video. Make sure you're comfortable with that before watching any further. Basically just says for you to do your own due diligence. I'm not an investment advisor, all the sensible stuff, I guess. Now, most of you know this already. Again, I'm registered with the CMT Association, working my way towards my chartered status, and technical analysis is something that I'm widely known for, and it's something that I do professionally. Now, if you get some value from this, feel free to subscribe to our channel. We don't upload a massive amount, but whenever we do, as you'll see, we do try to provide as much technical insight and professional technical guidance as possible. Now, just to give myself a little bit of credibility as well, this was the performance of the stocks that were provided in last week's analysis. There's a lot of really top performers. Technology was an area that I guess everybody was scared of, but again, technical analysis helps to navigate the fear, I guess. Now, I'm just going to spend maybe 2 or 3 minutes talking about the overall market. Then again, I'm going to get into these individual stocks that will hopefully give you some assistance over the forthcoming 7 to 10 days. Now, this is what is called a rotation graph, and what we're really looking to do with a rotation graph is identify the strength within the market. This is a tool that I like to use. It's never used as a standalone tool. The individual charts for the individual sectors are far more heavily weighted, but it does give us an idea. We can see, for example, that solar has had a massive week. We've got biotechs moving into a leading area of the market, and again we can see that technology is starting to gather a little bit of momentum, and this rotation graph is relative to the S&P 500. So what will happen with the rotation graph is when they start to move into the leading quadrant, that means that these areas are outperforming the S&P 500, and that is what will drive outperformance within your portfolio. And again, this is something that I'm absolutely massive on. That leads me into the major indices, and a couple of things that I want to just point out. When we look at the S&P 500 or maybe the triple Qs or the Dow, we want to kind of look under the bonnet to see what is actually going on. Now again, I don't use any hindsight indicators. Those of you that follow my work will understand this already. And please don't take my word for it. I'm going to link in the end of this video the two analysis videos that have helped our clients to get defensive before the market crash and also the recent correction. And what we can see here is we've had a decline. Now I'm looking for support levels, and there are some technical tools, believe it or not, that can help us. But when we look under the hood, we can see that during this rally, we were actually seeing a deterioration of breadth with the percentage of stocks trading above their 50-period simple moving average. Now again, that is a warning signal, and we can see that the deterioration has continued over the last few weeks. Now, we would expect that with the market declining. I'm not going to break the internet with that knowledge. But what is interesting to me this week is the 200-period simple moving average. I'll give a shout out to David Keller, CMT, for this bit of knowledge. But the percentage of stocks trading above their 200-period simple moving average. Now, this line is plotted on the 50% level. And what we can see is this 50% level, for some reason, there's a natural gravitation towards it. Now, when the market is rallying, again, you would expect the percentage of stocks to be above the 200-period simple moving average. But bad things tend to happen when we break below this 50% level. And this is something that I've very much got an eye on. We've moved off this level, and we're at 55% now. So that is certainly something that I'm pleased to see this week. So we just need some follow through in this. The US dollar has been a massive weighting with the thesis that I've put out there, where we might have a rising US dollar, and this is a US dollar index, DXY, and it's no surprise here that the US dollar has ripped last week, and what we've seen is an overall decline with the broader market. Now, to highlight this, I've inverted the chart for the US dollar index so that you can see just how heavily correlated the charts are. So what the chart is basically saying is if the US dollar is going to rise, then it would be a reasonable assumption to make that the S&P 500 could potentially decline. And again, that's something that I've been calling on for the last few weeks. Technology has been chopping about sideways last week. Yes, on the whole, technology did pretty well last week, but I do want to see a little bit more confirmation. I'm very, very happy, I think, like everybody, at what we've seen on Friday, but I do try to put things into perspective, and I would like to see these two levels clear, the 50-period simple moving average, and I've also applied an AVWAP from the recent high, and if both of those levels clear, again, it would make a lot of sense to be heavily weighted, in my opinion, towards technology. I don't see the trend in technology ending anytime soon, but likewise, we always have to ask the question, what if we're wrong? And for me, the bullish thesis on technology would come into question if we were to break below the lows from the 21st of September. So that's really what I'm seeing with technology. Now, it is important to note last week that a lot of sectors got absolutely massacred. Now, it hasn't escaped my attention that some of the leading tech areas performed well. There's clearly a massive weighting within the major indices with the big technology firms. So that's something that I've got an eye on. Although technology had a decent week, lots of areas of the market got completely destroyed. And when the market is, I guess, getting destroyed, again, we should be looking for outperformance, and we should be looking for areas of the market that are showing strength. Now, I posted this chart to social media this week and I got a lot of flack for it. And basically saying that with financials, if you are someone out there who is looking to buy into the financials at the moment, this is what you would call a relative chart. So financials relative to the S&P 500, we are now breaking below the financial crisis lows. That is not bullish for financials. So what that's basically saying, and what this chart is saying, is there are far better areas of the market to be allocated than things like financials. Again, this is where a lot of my work is heavily geared towards. And I also called out Goldman Sachs this week because Goldman Sachs have put out a piece where they're calling on their investors to move into value. And I provided this chart as a counter argument. Again, this is growth stocks versus value stocks. So what we're basically saying here is growth is in a massive uptrend. It's outperforming value. We have broken above the year 2000 highs. That is not bearish for growth. If you are looking to invest in value stocks, I'm not saying that you can, if you're, living off dividends, for example, it's completely valid. But if you're looking for performance in the market, then growth should be a place of focus. Very pleased to see volatility drop off on Thursday and Friday. Again, what we can see with the market, when volatility is rising, stocks are generally going down. And it's no surprise that when volatility is dropping off, stocks go up. So I would like to see volatility drop a little bit further, and that should hopefully give more weighting towards a bullish thesis than a bearish thesis. So that's me talked about the overall market for 5 minutes. Now, I guess most of you are interested in, the individual names. So again, I can't emphasize enough, please do your own due diligence. There is no guarantees that these stocks are going to deliver a massive performance for you this week again, but let's see what we're coming up with. Now, Peloton, again, I've applied Fibonacci extensions. We can see that these Fibonacci levels in the past have offered significant resistance. So again, if we clear above $100, then that is not a bearish move for Peloton. So I think if we move above this level here, I think there's a logical target to aim for at 150 as a minimum. Again, all bets are off if we break out and then we have a failed breakout. But again, please do your own due diligence. Again, we're still bullish on Amazon. The level here has held firm. I did post an analysis to social media a few weeks ago saying below $2,900 is likely a problem for Amazon. Again, you would expect strong stocks to continue to be strong. Again, that's something that we're seeing with Amazon. I'm still calling for my $4,500 target on Amazon, but again, it will take some time to get there. Just to highlight the point I was making about finding relative strength, something else that I should have said, if there are any disclosures that I need to make about existing positions or positions that we have provided our clients over the last 7 to 10 days, then I will disclose that as per my code of ethics, and VSLR is one of those disclosures. Again, excellent relative strength. This is exactly what we're looking for in the market. This is an idea that was presented to our clients last week, and it's off and running. It's already moved 10%. It's in the solar space, so the expectation is that VSLR will continue to move higher, given the relative strength and the performance that it's had. CLDX, Again, we like it above $14, had a huge uptrend, consolidation base of 3 months here. Again, the bigger the base, the higher in space is the technical phrase, and we like it above $14. Snapchat, very similar looking setup. We've got uptrend, consolidation base, and we like it above $27. Now, Nuance Communication, again, another disclosure. This is a stock that was provided to our clients a few weeks ago. It's performing very well. But we've applied a trailing stop loss to it. We are still bullish on the stock, and ultimately we see it moving towards a minimum of $37. Another disclosure to make, NVTA, again, this was provided to our clients last week, and it's off and running. We have a target there of around $61. Again, it's started moving, so now it's about just managing the position to profit. But like I said at the very start, we want to be in trades for weeks to months. We're not day trading, we're not in it for little $1 or $2 moves. We want to take advantage of $10, $20, $50, $200 moves, and there are technical tools that can assist us with extracting as much profit as possible. We're not in and out of trades every 5 minutes or anything like that. Very much quality over quantity. Netflix, last week I provided a chart saying how this level here is a key support level. I've been asked about it again this week. We have rallied off the lows here, but I would be very cautious about any potential 50 period simple moving average rejection. Again, I think if it moves above the 50 period simple moving average, it probably goes and tests this upper level here. We know that when stocks start to range like this, it can do it for quite a period of time. Just as a heads up, the technical approach here would be that if it does reach the upper end of the range, all you're doing is tightening up your stop loss to protect profits in case it comes back down to the lower end of the range. That's just basic common sense and something that we learn in technical analysis kindergarten. So again, that might be an approach, more of a swing style trade. Apple, clearly bullish on the stock, have to be bullish on Apple. However, that said, it has had a recent decline with the overall market, but very similar to the triple Qs. We want to see these levels cleared. We want to see the 50 period simple moving average, and we want to see the AVWAP clear as well. And again, I think continue to be bullish, and it probably goes back to retest its highs at 140, providing the market plays ball. We have Microsoft, I like it above 210. We've got AMD. Again, this is a dip that has been bought by quite a few of our clients this week, and certainly above the 50 period simple moving average. Again, that would lend weight to buying the dip, and hopefully AMD will go back and retest its prior highs. Now this is Crowdstrike. Again, it's had an incredible move recently. Very good company. We like it above $150. I do want to see these technical levels cleared. We can see that these Fibonacci extension levels can provide a little bit of a hurdle. And I get asked quite a lot why we use things like Fibonacci levels. The reason for that is very simple. Once we achieve a set level, this period of time can sometimes take 2-3 months before it actually breaks out again. And the technical approach is not about saying that, by exiting, you're saying it's a bad company. All you're essentially doing is saying, you know what, thanks very much, Mr. Crowdstrike. I don't want to wait around for the next 2 months with my capital doing nothing. So let's go and move my capital into another good company, and then we can revisit you again when you either have a big pullback and buy the dip, or again in this case we could wait and buy it on another breakout. So that's about the approach with the technical side of things. It's just slightly, I guess, tighter management of positions. Beyond Meat looks like it's gearing up here for a big move. We like it above 167. It is a chart that was provided to a couple of our clients on this breakout here. It is doing pretty well at the moment, but again, above 167, and I think this flies towards 240. Very high momentum potential, and again, probably likely to deliver outperformance, you know, with your portfolio. Nvidia stock I like very, very much. Recent pullback, we've pulled back to the 50 period simple moving average. Again, I suspect that this is a stock that's just gearing up for the next leg higher. For those of you that have followed my channel for a while, will know when it broke out at 385 here, I put a 620 target on it. At the time, I was called an idiot. Again, it's not rocket science. We reached as high as 590, but ultimately I do see it going and testing this level here. Again, it's technical analysis. DocuSign last week, I said that this is a level of interest that you could potentially buy the dip. That's exactly what's happened. We've had a bounce off this key support level and it's off and running. So again, DocuSign is one of those that there's clearly a massive need for it with businesses. I use it for my business. We've got RSI, it's in a bullish regime. We've still got really good relative strength comparison to the S&P 500. So again, we have to still be bullish on DocuSign. Provided DocuSign is above this level, I think you can continue to be bullish on DocuSign. Last week, I said Square Inc. might be a stock to consider if it breaks out. Again, that's exactly what's happened. It's off and running. I would expect it to go and test 173 again. But again, as I said before about when stocks tend to range and move sideways, as it approaches 173, there's nothing wrong with just tightening up your stop loss in case it rejects. Again, if you're technical in your approach, I know there's many of you that will be long-term investing in great companies, and again, completely valid. Something that I've learned many years ago is to respect all styles, because all styles are valid. Just because the fundamental approach isn't my approach, it doesn't mean that I don't respect it. So again, I think 173, I think that's a logical area of interest. Trade Desk I talked about last week as well. I've been asked for an update on it. Again, lower end of the range, not rocket science. We're taking it to the top of the range. It's more of a swing style trade, and it's the type of swing trade style that I incorporate with my work. So again, I would expect this to go and test 510. It's not offering an entry at the moment. I think if you're looking for optimal entries or buy zones, as some might call it, you really need to be buying in at the lower end of the range or on a breakout. You know, the price at the moment is in the middle of no man's land. It could go down, it could go up. But what I try to do is just eliminate as much stress from entry positions as possible. Because there's nothing worse than, you know, taking a position and having price reverse a little bit, and then, you know, it just causes a little bit of a headache that I don't particularly like. So certainly, you know, Trade Desk is still one of those. STNE looks really interesting. I think above $56, I think potential breakout. Again, it's not rocket science. This is a stock that's ranging at the moment. It's range bound. But again, when we get a breakout of these bases, quite often they can start to move. I think there's a lot of momentum potential, certainly with STNE. Lamb Research has bounced off the 200 period simple moving average. As a disclosure, this is a chart that's been talked about with our client base. We have clients that are in the position at the moment, and it's doing very well. Ultimately, you know, if semiconductors continue to rally hard, if Nvidia continues to rally hard, then you would expect Lamb Research to get taken along for the ride. Now, Probably one of my most requested charts actually is Mr. ROKU. Now, it didn't escape my attention last week that we had a breakout in ROKU. Now, a lot of you will be trading on intraday time frames. A lot of you will be trading off daily time frames. I like the daily chart, I like the weekly chart, and I like the monthly chart. I try to figure out what chart is relevant or has the most relevance. I understand not everybody watching this video will be able to watch the market for 8-9 hours a day and to filter through thousands of charts every single week. That's certainly what I do on a professional level. And when I'm looking with my professional hat with ROKU, I think the weekly chart has a lot of merit here. Yes, we can see that we've had a level here where we tested $200, which I have to say is also another logical level of potential resistance, these psychological round numbers. But at the end of the day, ROKU has just gone out at a closing weekly all-time high. That is not a bearish development for ROKU. So ultimately, if we get follow through on this move from ROKU next week, given the potential momentum, if this does get going and it goes and tests $200 in reasonably quick fashion, you would expect a breakout. Again, I would say all bets are off if we start to kind of close below these levels. But again, it's very difficult to make the case for being bearish on ROKU when we've just gone out a weekly closing all-time high. So that's hopefully good news. Now, one of the beaten down names, now this is one that one of my clients actually requested from me this week. Now, typically, I'm not really looking for stocks that are showing weakness and not really great relative strength, but I also, to the other side of things, understand what a great company is, and AYX certainly fits into that camp. Now, what I've essentially presented is a thesis that we're potentially breaking out and undergoing a bit of a change in trend. Now, one of the things that I like to do is when we are looking for a potential bottom, we look for these divergences where we have price declining, but we've got rising momentum. That can quite often be a signal to us that a stock has found a bottom. So although it doesn't really make sense from a lot of technical perspectives, I'm very, very open to the idea that we can merge the fundamental approach with the technical approach. I think most of my clients are certainly come from the investing world, and they like to apply technical knowledge because I think most understand that it's starting to become more of a technical world when we talk about things like algorithms, support resistance. It's amazing how technical analysis and these price levels are ultimately respected. So although we are trading below the 200 period simple moving average, although the 50 period simple moving average is potentially about to cross below, that's generally a bearish signal for a stock, but it's actually quite a poor signal, these moving average crossovers. So for me, I'd just be looking for price here. If we get a bit of a rally here, again, I would just look to tighten stops as it approaches the 50 and 200 period, and hopefully it breaks out, which would then give you an opportunity to compound on your position. But AYX, very, very on the fence. Again, I've been asked about it this week, so I thought I'd better provide a chart. We've got Wayfair, again, absolutely monster move. Congrats to anybody that's in there and certainly still holding. I mean, I know it's had a big drawdown here. Although this is a logarithmic chart, this does represent quite a substantial percentage decline, but it does look like it's gearing up for another potential breakout in Wayfair. So again, not rocket science, we're looking for relative strength in the market. And we also have Nautilus, NLS. It does look like it's building a little bit of a base and potentially about to break higher. It's not escaped my attention that RSI is in a bullish regime. Again, excellent relative strength to the overall market, and this is pretty much what we do at honeystocks.com. If you are somebody that does struggle a little bit with your analysis of the market, maybe you don't have the time to watch the market, etc., etc., you can maybe stick around for a couple of minutes here. But if you have enjoyed that, please do give it a thumbs up. If you've got some insight, some knowledge, give it a thumbs up. If you have any charts that you would like to be considered for, my next analysis video, which is probably going to be in a few weeks' time, I simply just don't have the time to provide these every week now. My client base is quite substantial, and I have a lot of certainly retail investors, etc., that subscribe to our research. And if you don't know what we provide at honeystocks.com, you can jump on to our website, have a look around, see if anything there, I guess, floats your boat. But what we provide with our membership is we provide analysis like this every single weekend. We provide a shortened version of this analysis every Wednesday. It's the Honey Stocks halftime. Within that, we also provide trade ideas. We provide a trading community. I provide personal charting support. So if you have a chart request, or if you're unsure about a chart, then you can reach out to me anytime, and I generally respond within a few hours. But again, something that I provide with the membership, it's included free now, is access to our technical analysis program. Although we're not in the education game, I think it's very, very important that everybody understands my work and how to apply it. So if you're somebody that would like to certainly learn technical analysis, if you'd like to understand how to do what I do, etc., you have access to a very, very comprehensive program, and I'm told it's very, very, very good. So again, feel free to go and check that out. But in this day and age of lack of transparency, shall we call it, what I like to do is on our website, I log every single trade idea that I've ever put out over the last 3 years. This is a recent alert that went out for NVTA. I did disclose this during the presentation. Certainly, that one's off and running. There's the recent one for VSLR. Again, that's off and running. Previous alert for MVTA, we first recommended this one way back at $18, and this thing ripped. I think it was 99% or something like that. We know what to look for, and we're looking for strength within the market. There's Zscaler. I think Zscaler made it its way to $150. So that should hopefully give you an idea. But just to take it a step further, you can go on, you can have a look and see what types of stocks we recommend. We don't do penny stocks. We're not doing stocks of $5, $10, etc. We pick good quality companies. We understand and identify underlying trends within the market, and that's helped a large proportion of our client base to achieve outperformance. And I've done this for the last 3 years. So again, you can go and have a look and see if the types of stocks that we select are a good fit for you, and obviously your capital, etc., etc. But I think if you're looking to maybe get away from day trading, if the penny's dropped yet and you understand that it doesn't quite work, we might be a good fit for you. Maybe you're looking to learn technical analysis. Maybe you're too busy to filter through the market and the thousands of stocks that we do. Maybe you want to be part of a community. I don't know what your deal is, but whatever it is, you can probably find something within our platform that probably floats your boat. But it's only $500 annually. You get a lot with it. So certainly you can go and check out our website. But if you have stuck around to the end here, from the bottom of my heart, thank you very, very much for watching, and maybe we'll welcome you soon. Thank you very much.